Okay, we're live today to talk about AMC and give what's pretty much become our daily update. Now, the news this morning was that the large fund that bought all those shares from AMC, Mudger Capital, they sold all those shares out. This actually took place yesterday. They essentially day traded into and out of a $230 million stock position. Now, the original reason the stock popped was because, hey, AMC is actually going to raise some capital. So while that's dilutive, in this case, it made the stock pop. And it provides more of a stronger financial stability or platform for the company, right? But Mudrick, who bought this stock from AMC, quickly sold out of it. Now, in our data, which is focused really on options, we want to show you our most recent Equity Hub screenshot here. So what the Equity Hub is doing is it's aggregating all of the available open interest in AMC. And what you can see on the screen here is all of these numbers are at 40. Well, 3 of the 4. So we have a massive, what's called hedge wall. This is a resistance line. And we have large deltas at 40 and humongous call open interest at 40 as well. So this is a real sticking point for the stock. So if we scroll down just a little bit, you can see that the stock pre-open was actually up around 45. It drifted back down to 36. And now we're kind of pinning this level. So the issue here, if you're a bull, is that it's Wednesday now, and there's a lot of open interest that expires on this upcoming June 4th. So we told everyone to expect on Tuesday morning, which was the first day of the week, that everybody was going to pile into the front month calls for AMC. And they do that because it's the cheapest way to essentially gamble on the stock, right? Now, I want to be clear about something. Calls right now are extremely expensive. Yes, you might make money on them, but that doesn't mean they're not very expensive relative to historical metrics, right? So what you have now is you're going to have a lot of decay. We talked about this last week, that on Thursday night and Friday morning into Friday's expiration, there could be a lot of selling because everybody that bought these very expensive calls, those things are going to decay very, very quickly. And market makers who initially have to buy stock to hedge themselves, as all those call options expire, can start selling off those shares of stock. And the main focal point right now is the 40 strike and then the 30 strike. So those are the two levels. So if we zoom out just a little bit and look at the major chart, on Friday of last week into Monday, we did a video that said, look, 25 is showing up as the big level. This is when we said we're expecting a lot of people to pile into calls for this week. That was on June 1st we said this, and that is what happened. So now we have a ton of gamma at 30, so we think this is the bottom for the stock for this week. But there's so much open interest and so much possible decay at 40 that I think that this could really cap the stock for this week. Now, likely what happens on Monday, next Monday, people will reload and we kind of rework this entire thing. But I want to show one thing that nobody else, I don't think anywhere, has this tool, and it's called the HIRO indicator. It's our indicator, so no one has the HIRO indicator, but what it's showing you is completely unique. So bear with us for a second while we lay out what this is. What you're seeing here, and this is in the Bookmap trading system, there are partners helping to build this platform. What you're seeing here is the price of AMC stock. So you can see the flow here. The red and green circles are whether trades took place with the bid or offer, and the bigger the circle, the bigger the size of stock that traded, right? So what are the triangles? Well, the triangles is the real-time options flow that's taking place. So the bigger the triangle number, the larger the hedge impact of that options trade. So in other words, if you see a 13K trade like you do here, that is a much larger trade. Sorry, I just zoomed in there. But if you see, say, a 2K or 8K trade, that's a much bigger trade segment than, say, something that is only, a few hundred. So we're aggregating these symbols here. We aggregate the trades, together to provide things a little bit more clarity. So those are what the triangles are. But what I really want to show you and I really want to talk about, so I'm going to pause some of the on-screen indicators here just to turn those off for a second. What I really want to show you is this bottom line. So this bottom line is the cumulative options hedging impact. So every single trade that takes place on the day in AMC, we're recording the delta hedge impact of that trade in real time. And what's so fascinating about this is, the stock opened up, and I'll stop zooming around on us now, but the stock opened up, I'm going to try out this pen tool that I just got, but the stock opened up here, right, around 9:30, which is this line here. It opened up, and the stock immediately shot higher. So once the stock shoots higher, what happens is we extend into the 40 strike area, which is where all this open interest is. So again, if we kind of just draw this big line out here, This is where the big open interest is. Change this color to make it a little easier to see. Cool. So that's where the big open interest is. So if we know that, right, if we know that these are the big lines of open interest, we can assume that this is where hedging flows really pick up, which is this, this general area here. I will get better at this pen tool as I go. There we go. So we know that that is the case with the large open interest, right? That hedging flow should pick up into that area. So if we then look at this cumulative indicator, what's so interesting is we could see the call flow come into the morning, right? This is a positive number, which means that market makers likely had to buy stock to hedge. People are buying calls. It's a positive delta trade. Market makers need to buy stock to hedge themselves out. And then look what happens here. We hit 40. There's a big jump in call options right here, along with a big stock print. The stock shifts up 2-3 points very quickly. That's 5%. And then at 40, the stock has just done nothing, right? It's just traded purely sideways. But not only that, the options flow has completely turned sideways. So it was bullish to start the day. And now at this large OI strike of 40, we're just trading sideways. Now, everything in AMC, I'd like to say it's horseshoes and hand grenades, right? Trying to pin this stock to the dime or to the penny is going to be nearly impossible because there's so much flow coming into and out of it that you can't, suggest a single number that it's going to hold to. So look at this 40 zone as a very major area of support and resistance into sort of the next day or two. And then we think it's likely that the call activity is going to weigh on the stock into the Friday expiration, just as it did last week. Just to give an update on what's trading so far in AMC, we see total calls traded today are 642,000 calls. It's only 10:30. The biggest options volume last week was 2 million, and that was on Thursday. So we're on pace to come in around that number today, probably a little bit under it. There was multiple days on Wednesday and Friday last week. We traded over 1 million contracts. So those are big, big numbers. Now there's one last thing that I want to talk about here, and that is the cost of call options. The price of options is extremely high, and I don't see anybody talking about this, and I want to bring this up for those of you who are interested in trading the stock. I want to show a quick graphic here, if I bring it up in another window, and it shows what the cost of options are right now. So most people, when they look at the price of options, they're looking at the dollar price, right? They say, okay, the call is $2 or the call is $5, and I think the stock will go up in $6 the next week, so I'm going to buy that call. It makes sense. But the way that professionals price options is through what's called implied volatility. So implied volatility is just another way of assessing the cost of an option. And so right now what we know is the truth in AMC is that the price of call options is extremely high. And I'll show you guys why I say that is on a chart here. Let's bring this up. So we're going to look at two things here. First, this is a screenshot from Thinkorswim. This is the volume for today. You can see that the volume in the 40 strikes is heavily outpacing everything else. And then what's always interesting is that they add new strikes, those options also have high volume. And I think that's simply because people are looking for the cheapest possible option in dollar terms to trade. And you are paying an extremely high price for that option. Again, it does not mean that you can't make money on it, but it shifts the odds way against you. So AMC right now has a very interesting skew. And what skew simply is we're looking at the price of calls versus the price of puts. And how do we assess that? What we see here is the call implied volatility on the bottom left and the put implied volatility on the bottom right. As you can see, and now each one of these colored lines is a different expiration. So let's just talk about purple. Purple is the color. The color purple is the implied volatility, or said another way, the cost of call and put options that expire in 2 days. As I said before, that is where the bulk of volume is, right? So it's very expensive. Sorry, I just got distracted by comments. Someone said they can't see. I hope you can. So the cost of options is very expensive, and we're going to focus on this Friday's expiration, right? Because that's where all the volume is. All these purple boxes here are volume for this week. Those are the cheapest options. If you want to gamble on what's called low gamma, high impact lotto tickets, that's what you want to try to play, those call options for Friday, but they're very, very, very expensive. You're much better off, in my opinion, it's not financial advice, just buying the stock if you want to try to play. Now, people complain that they can't get margin on the stock and that can't give them leverage. And there's a famous saying here, bulls make money, bears make money, but pigs get slaughtered, right? And that's what I think about when people say they want more margin in a stock like this. So back to the implied volatility. You can see that the call implied volatility is up in the 2,000 or 2,500% range. Let's not talk about what that percent range means. This is just consider this the cost. Now, if you were to look at the cost of an Apple option, that option would probably be around 30. So 2,500 is astronomical. Now look at how much more expensive, these are the strikes across the bottom, look at how much more expensive these call options are versus puts. Way more expensive, right? The implied vol for puts is only in the 1,500 area. That's still unbelievably expensive, don't get me wrong, but calls are way more expensive, and that is due to call demand, right? People buying calls. So as more people come in and buy calls, the implied volatility goes up, the cost of trading those options goes up, and quite frankly, your odds of making money on those calls goes down, right? Because you're paying a lot for those positions. The sneaky way, if you wanted to try to get long stock, and in full disclosure, I did a little bit of this, is to sell put options, or put spreads is probably a less risky way. And that is because in this case, usually people are used to it when a stock crashes, that implied volatility spikes, right? But in this case, AMC is crashing up and volatility is skyrocketing. So what can likely happen if the stock sells off, implied volatility will drop. The cost of options will drop. So it's kind of like shorting a stock. If you sell a put and the market drops, ironically, that put could possibly make money. Now, again, this is not financial advice. This is way too quick of a video for you to trade off of some of this information. But look at that information, selling put spreads, and consider it. There's a lot of great content out there if you look at put selling and how that can be a low risk if you trade a spread, a managed risk play, right? So something to really consider. Again, this is that real-time view. This video will be uploaded onto our channel so we can see. We have actually a few questions in here. I didn't really announce this chat. I've never really done YouTube Live. I had a few mechanical issues with my Illustrator earlier. But I've seen so much bad content out there. People that just want to pump the stock, they create these cults, and I think that hurts people, right? You could lose a lot of money. Now, don't get me wrong. If you think AMC is going to go up, trade it. I love it. David and Goliath, that whole story, go for it, right? But manage your risk, right? Because the number one issue that most people run into in trading is they run out of money. When you're out of money, the game's over for you, right? Make as much as you can. Hallelujah. But do not risk all of your chips on one bet, right? Particularly when that bet expires in 2 days, as in a call option. That just doesn't make much sense here. So a few questions. Ian Casey Douglas, thanks for popping on here. Does the Hero show ES? Yeah, so let's look at the ES market, right? Super interesting. These are the ES futures, right? So this tracks the S&P 500 for those of you who aren't familiar with this. And this is the real-time options flow as well. Now I'm going to turn off the on-screen indicators just to make it a little easier to digest here. This tool is available if you have the Bookmap trading platform. Anyone can subscribe to it. Go to bookmap.com. And if you buy the Hero indicator, that is our real-time options indicator that we built. So what we're seeing here was a bearish flow to start the day in options. That's because this number started off below zero. And you can see the market was very weak. Now, how did you know to buy the dip around this area? Obviously, hindsight is 2020, but in this case, the options flow really started to pick up. And when this options flow flips above zero, that's telling us that people who are trading options have a bullish outlook in the market. Now, this is a mild bullish outlook, but we knew that when the market dipped, there was not a lot of put buying. The fact that this picked up indicates either call buyers or put sellers, and so this infers that there is some stability in the market. That's why this cumulative indicator starts pushing higher, and this suggests that, okay, the options market is not worried. Okay, if the options market's not worried, then maybe futures can catch a bounce. Now, our upside target in this case is this level called the Combo 3. Combo is simply a proprietary blend of all options that exist in the S&P 500. So XSP is the index, small index options. SPX are the big index options, and the the spiders is the S&P ETF. If you're not looking at all of those, you're not looking at the whole S&P 500 complex, right? You're missing a huge part of the picture. So anybody that just looks at spider options or just looks at SPX options is doing it wrong. They're only looking at half of the picture. So the combo strike is our measure of the upside target for all of the S&P 500, which of course the ES futures are linked to. I want to also show GameStop while we're here. I'm going to turn again the on-screen indicators off here. Sorry, I should have done that before. So let's just look again at the cumulative flow here. 250 in GameStop. You know, when the stock really reached this high, you can see it was call buying again, but then look at this negative delta flow come in. These are either call sellers or put buyers that come in, and with that, the stock immediately comes down. The put flow turns off, or call sellers stop, whatever those negative delta trades are, and the stock kind of bounces in this area. So that's telling us that the hedging flow, right, the market makers, when this indicator shifts lower, the market makers are likely having to sell stock. It's also a sentiment indicator. If this number suddenly flips negative, that's telling us that a lot of maybe put buyers are coming in, or everyone's coming in to sell stock. So this is the only way we know of to look at real-time options flow on a charting application. I think it's probably one of the coolest things we've built, maybe definitely the coolest thing we've built. Certainly from a technology perspective, it's an immense amount of technology, and we're just super excited about it. Tesla, we can pop that on the screen here as well. Again, I'm going to need to mute some of my on-screen indicators here. And Tesla is interesting to look at because look at this bearish options flow that comes in. I mean, this is undeniable that the name from the start of the day, we have put flow coming in, right? The stock is weak. The put flow kind of pauses here, right? Because this indicator flattens out. It means that it's either neutral flow or people have really kind of taken it easy in terms of trading options. And then all of a sudden at 10:30, the put flow breaks and then the stock breaks down. Right there, I don't think that there's any coincidence here. Now, there may have been some news that came out. I haven't checked the news here, and you can see this thing really break down. Right? Again, this is people buying puts, selling calls. I know that the SEC said something about Tesla, who's Elon Musk. He's the golden boy. No one can touch him, right? But the SEC, if they really want to go after somebody, again, I haven't read the story. Don't trade off of anything I'm suggesting here, but the fact that the SEC is looking at Elon again or trying to talk to him you don't want the SEC talking to your CEO. It's just it's not a good look. So I'll take some questions here. I wasn't see great insight into the mines. I really appreciate that, Nick. Thank you. Will CHARM turn positive at a certain price point? So Michael, that's a really great question. I think you're talking about AMC. So let's talk about CHARM. CHARM is a complicated Greek-sounding term. It's really simple. CHARM is simply delta decay from options. So as everybody knows, theta, right? Theta is time decay. So if we buy a call that expires on Friday, every hour that goes by, of course, all else equal, every hour that goes by, those call and put options are going to decay. They have time decay. So as those calls decay, the delta of that option changes, right? Because let's say you have a 50 strike call right now in AMC. Every hour that ticks by to expiration, that 50 strike call is losing a lot of money. And because the implied vol is so high, that decay is rapid, even more rapid. So as time passes and the call decays, market makers can sell off hedges. Right? So if the market maker had to buy 100 shares yesterday to hedge that 50 strike call, maybe now they only need 75 shares. And then maybe at the close of trading today, they only need 50 shares. So they can adjust their position from 100 down to 50, which means selling pressure. So when you play that out over millions of contracts in open interest, you can see why those flows would be so impactful. And look at this here. The stock is really doing nothing. It's stuck at this 40 level. I don't think that's any coincidence. I personally think, again, don't trade off this, that 40 is probably the high for the day. Now, obviously, the stock could rip up to 45 real quick and then come back down. So I expect the stock to close within a few percent of 40 is what I'm looking for Friday's expiration. Again, that's just a thought. Please don't trade off of that. No financial advice, et cetera, et cetera. Hey, Nick, you sent us our CV. I will check that out, buddy. Thank you. Great broadcast. Thanks a lot, Michael. I really appreciate that. So with that, this is our quick update on AMC. I mean, again, 40, we think just because of this open interest level on our Equity Hub tool shows that 40 is such a large strike. Call options are going, especially Friday, those things are going to burn up like crazy now. Unless the stock really rips higher very soon, the implied vol, again, as we showed before, is so high. And CHARM, just as Nick suggested, and VANNA, those are the two flows that are going to work against AMC now into the close. And that is, again, because there's so much expiration taking place on Friday night that his implied vol burns up, right? And as the CHARM kicks in, that's the delta decay or the time decay of those options, all of those flows are leading market makers to likely have to sell this stock. And this is simply a time thing, right? I have no axe to grind against AMC. People want to make it go to 1,000. That's great, right? But this is kind of a cycle. It's a weekly cycle. People come in on Monday, Tuesday. They buy calls that expire Friday. They pump the stock up. And then on Thursday, Friday, in this case, it's a shortened week, right? So the dynamic's a little bit different. But on Thursday and Friday, the decay kicks in and the stock gets pushed back down. And then on Monday and Tuesday of next week, you can see, again, the same cycle sort of repeat. Wash, rinse cycle. It's kind of an ongoing game. And now we can actually see that the AMC options flow is starting to turn a little bit bearish here. Not strongly, but if you are a bull, you want to see this hero indicator shoot straight up, right? You just don't want to see it stop going higher. And that's not obviously been the case. In the same way that if we click back over to Tesla here, you can see that this is just bearish flow, right? This is not a good look. Even if you didn't look at the price of the stock at all, if you just saw this happening, right? The fact that this is negative and drifting lower, that's a tough look for a bull in Tesla at the moment. San Diego, good question. Are we going to include precious metals and commodities? That is something that we're looking to do. It's actually a different data feed than what the Hiro's based off of. So the Hiro's based off of all of the available equity options, index and ETFs in the US. So we are going to look at adding commodities and precious metals over the next several months. That is definitely one of our goals. So, okay, with that, we're going to end here. We appreciate everybody popping on the stream. Thanks, that was unexpected. If you have any questions, hit us up on Twitter. We're at SpotGamma on Twitter. Send us an email at info@spotgamma.com. Leave questions in this chat in the YouTube video. We're more than happy to get back to you on all that, and we'll try to pop back in before the close to give everyone kind of the update on AMC, Tesla, GameStop, etc. So have a great day. Talk to y'all soon.